GST stands for Goods and Services Tax. It's a form of indirect tax as opposed to direct taxes such as income tax. Let's try to understand the indirect taxation scenario prevailing in our country. India, as you know, is a federal country. What that means is that powers are clearly defined between central and state governments. In the sphere of indirect taxation too, for example, while the center has the power to levy indirect taxes such as service tax, the state has the power to levy indirect taxes such as value-added tax. Let's take a look at some of the indirect taxes being levied by the center and states. The state levies basic customs duty, central excise duty, service tax, additional excise duties, countervailing duty, special additional duty, and various other surcharges and cesses. The state levies VAT, luxury tax, entertainment tax, taxes on gambling, lottery and betting, and also various other surcharges and cesses. The current structure has some drawbacks. First of all, there are just too many taxes. Secondly, there are multiple jurisdictions for the taxpayer. That is, to pay service tax, the taxpayer has to deal with the central government, but to pay VAT, he has to deal with the state government. Thirdly, services and goods are subjected to different rates of taxation. Fourthly, there is tax cascading across the value chain. And finally, there are interstate barriers in the form of taxes such as GST and entry tax. Now, GST is a tax levied on interstate movement of goods. That is, this tax is collected and kept by the originating state. If a good moves from Telangana to Karnataka, GST at the rate of 2% on the value is collected and kept by Telangana state. No input tax credit of this tax amount is available to the buyer in Karnataka. The aim of GST is to overcome these drawbacks. With the introduction of GST, there will be a single tax that will subsume the multiple taxes currently being levied by both the center and the states. There will be same rate for both goods and services. There will be a removal of interstate barriers by the removal of taxes such as GST and entry tax, etc. And there will be a seamless availability of input tax credit from the manufacturing stage through the distributive trade to the retailers. Now let's take a look at how GST will simplify your tax and save you some money too. For this purpose, I'm taking a coffee receipt from your local coffee shop, let's say Starbucks. Let's say in the pre-GST scenario, the cost is 190 rupees. Now, there will be a VAT applied on this at the rate of 14.5%, which will come to around 27.55 rupees. There will also be a service tax at the rate of 15% on 40% of the cost, which comes to around 11.4 rupees, bringing the total cost to 228.95 rupees. Now, if you observe this, 40% of the cost is being subjected to both VAT and service tax. In the post-GST scenario, the calculation becomes simpler. Let's take the same cost, that is 190 rupees. Now, instead of applying multiple taxes, we just apply one tax, that is GST, let's say at the rate of 18% on the cost, which comes to around 34.2 rupees, bringing the total cost to 224.2 rupees, saving you around 4.5 rupees. Now, GST is a very good tax reform that will benefit everyone, the taxpayer like you and me, the trade, and the government too, by boosting its revenue.